all of those who are members of CPA and those who are holding positions in ICPAK to really continue to build this structure. This is what Kenya needs, and what we're seeing today makes all of us very proud. Today I'm going to speak to you about corporate governance, and as we know, there has been many issues recently that have made the corporate governance debate more relevant. So let me begin my presentation. Is it this way? Uh-huh. As I said, I'm delighted to be here, and today I represent the Central Bank of Kenya, CBK. I'm not sure what's happened, but anyway, I'll continue. And in some senses, central bank is not often seen outside of their institution. And so today I hope to demystify a little bit our attitude to corporate governance as we sit inside that building. As I said earlier, as a member of ICPAK, I'm also very proud and happy to be among my peers. What I thought about when I was asked to give this talk was that corporate governance is not an action at a point in time, like a balance sheet. Corporate governance is an activity. And I think this is where some of us go wrong. We put a structure in place, and then we check it every 3 months, but we're not actually monitoring the structure in the period in between. So to me, it's about compliance. It's about reassessing whatever we've put in place, evaluation. This screen is, monitoring and reporting. So I think it's an ongoing activity, and that's really the message I'm trying to push across today. The other thing is that all vibrant organizations, all vibrant institutions are forever evolving. And as they evolve, their corporate governance structure also has to evolve. So that's why I'm saying that as Kenya evolves, we'll get new challenges in corporate governance. And we must be alive to this. And the critical issue is how we recognize the new corporate governance challenges and how we address them. If you define corporate governance, what you see is it's the relationship between those people who manage an institution. And that's the management of the institution, the board of directors, the shareholders, and other stakeholders. So we have to be aware that those relationships need to be managed. If they're managed well, then you have strong institutions. If they're not managed well, then people take advantage of these relationships and it results in problems. I think from respect of a commercial bank, what we're looking for is we have the Banking Act, and we have prudential guidelines that are issued by the Central Bank of Kenya. And we're talking about compliance. Compliance with these guidelines and compliance with the Act. And in the Act and in these guidelines, we prescribe the board, senior management, and the framework that is required to manage the institution. I think also this thing of continuous monitoring and evaluation, the bank's activities must be in line with the strategies, the policies, legal and regulatory framework. If you achieve all of these, if you adhere to, if you comply with this structure, you'll have a strong, stable institution. As we know, despite these structures, despite these rules, despite these laws, we've had legal and regulatory problems, and this has resulted in not all banks having put in place good, sound corporate governance practices. I think in the CPK, recently we're all aware that 2 banks have been put under receivership, and 1 bank was put into liquidation between 2015 and 2016. Now, the common factors in the problems with these institutions, the struggles with these institutions, the challenges that these institutions have had is weak corporate governance and poor liquidity management, and is consistent through all the three institutions. And that's why corporate governance for us at the moment is critical. So what is the role of central bank in managing good corporate governance? I think what mandate, what rules, what guidance do we get? I think we strive to instill a culture of good corporate governance in banks. And we do this first by vetting those people who manage banks, those people who are in control, those people who have authority. This is the shareholders. After a certain percentage, we're concerned as to how much shares you have in a bank, what influence you have over it, the directors and the senior officers. And maybe I should stop here and just also try and define for you what a bank is. I know we all know the structure of a bank, but a bank is a money shop. It takes public money and holds it. And in that sense, that's the importance of having good structures around it, because it's holding public money. It's holding Kenyans' money. Those deposits do not belong to the institution. They belong to the individuals who have brought it to that institution. And therefore, it's very important for any institution that is taking public money to manage that money properly. So besides the vetting, we ensure that the institutions comply with the legal and regulatory framework by doing an annual visit. So all banks during 1 year will be visited by the central bank to ensure that they're complying. The other thing is that the central bank they're not commercial bankers. We belong to government and we operate as regulators over the banking sector. And in that sense, it's the oversight role of the banking sector which is continuous. So what we do is we manage the whole sector and make sure that the banking sector is stable. And in that sense, we manage the sector. We are not responsible for managing an institution. We also enforce remedy measures and administrative sanctions when an institution is not compliant. And obviously, central bank does not talk about this, but we're there fining and regularly sanctioning institutions that have not met the various regulations that they should meet. I think I'm a proper accountant. I don't speak for long, so you can see I've come to conclusion already. But that will give you time to ask questions. I think when I sit back and look at the kind of instability and problems that we've had in the financial sector, and in particular in the banking sector, what I see is that it's a matrix of responsibility. All of us have a role to play. And if any of us are not fulfilling our role, we weaken this structure. And if all of us are fulfilling our role properly, then what you have is you'll have a structure that is strong and robust and sustainable. Shareholders. How many AGMs do we attend as accountants, where shareholders' prime concern is the T-shirt or the cap or the umbrella that they're going to take from the institution? Do they really hold the institutions to account? When we see institutions that are reporting results that show a significant variance from the previous year, do we really ask the right questions, or do we sit there quietly and just accept and go and take our cap and our umbrella and we go home? The board of directors. What we've seen in some of the institutions where we've seen this weakness, are there independent board members? And do those board members speak up? Or did they go there for their per diem, for their recognition? You know, somebody said, I've been a director on this board and many others. Is that the accolade that I'm looking for? Is that the respect that I want? Or did I go there to actually do a job? Am I courageous enough to speak up and, if necessary, resign? So board members, have regular meetings, have structured meetings, understand your role there, and be proactive in your role. Management has this job of continually looking at the corporate governance standards, oversight, reassessment, evaluation, monitoring, and reporting. Don't assume that what you put in place is okay. It changes over time. Re-look at it, reassess it, and reconsider it. Control functions, of course, now in this new world, we have so many more. We've got compliance teams, we've got internal audit teams, and we've got risk teams. If you've ever seen the risk structure of an insurance company, I mean, when they come to boards to present, they can spend 2 hours explaining to you what you're looking at. And the same should be happening in banks, so that there's a proper understanding of what we're facing. And sometimes the risks are not, corporate governance risks. It can be IT risks. It can be fire risks. The world has changed, and we need to change with it. External auditors, CPAs, we also have a responsibility. We have to institute the corporate governance, and we must give unsolicited, impartial opinions. We must be courageous, we must stand up, and we must say the facts as we see them. I think I'm going back again, huh? I think at that point, I thank everybody for listening. I'm delighted to have come to be able to talk to you. Thank you very much indeed.
Thank you, Sheila. Let's clap for her again. You know, when I met Sheila yesterday, when I went to receive Sheila yesterday, I was asking her whether we are really so bad as a country, because you know sometimes you get worried when you see the things we get on the reports. And she told me, she actually confirmed that when you go out there, you actually realize that against what you see on the media and against what is happening in the country, we are not really so bad. I can tell you, members, my fellow accountants, there are a few things we must do. I went to meet the Committee of Parliament last month, which looks after finance and trade. And I have to be very careful what I say, because Honorable CPM Wadengo is here. And when the MPs were, the normal way they like doing things, one of the things I appreciated was the presence of CPA Honorable Langat, who is actually the chair of that committee, because we were tossed all over by the MPs, and there were questions, and our Honorable CPA would actually put a point of order and tell the MPs that question is not for ICPAK, that question is for CBK, that question is for the auditor himself, the auditor who audited that particular institution. And I think I want to tie that to the discussion we have had with the CPA Sheila today, the issue of corporate governance. And I think it's basically demystifying and breaking it down in terms of the challenges we are facing as a country in the commercial banking sector. And she said that corporate governance is not an action. Is not an action at a point like a balance sheet, but an activity which is continuous. And she went ahead and said that I think it all depends on how we recognize the challenges and how we deal with the challenges. And I think it's an issue of opportunity. Are we able to turn the challenges we are facing into opportunities? And she went ahead and said that the bigger challenge is actually implementation. Corporate governance structures could be there, in our policies, but are we implementing? I think that's a bigger challenge. And of course, maybe going a step further, the question we need to ask ourselves as professionals is, what is our role as accountants especially? And finally, she said that corporate governance is actually the mandate of central bank. Central bank does not manage the commercial banks, but it's their mandate to ensure that corporate governance is adhered to. Let's put our hands again for CPA Sheila. I'm now going to open, and I'm happy. I think CPA Sheila is a CPA. She took good time and left enough time for us to engage her. I think members, I would want us to restrict our questions to corporate governance. I know there are many issues we can raise here, but let's restrict our questions to corporate governance. Tell us your name, the organization you work for, and make sure you are as brief as possible so that we ask her as many questions as possible. I'll take the first question. There's a lady here. I'll take two questions, the lady and the gentleman on this law. Okay, let me also take the gentleman here. Those three questions. I'll start with those three questions first.
Thank you, Mr. Chair. My name is Azim Virji from Sadolin Paints Limited. I think the Deputy Governor very rightly highlighted the key concern in these ailing institutions being corporate governance. And my experience has been, and I've been acted as an external auditor for many years, that external auditors are not experts in corporate governance. And my recommendation is that in order to be able to strengthen the corporate governance, perhaps CBK should consider imposing a requirement of special corporate governance audits by people who are experts in corporate governance. Because if you leave it to CBK or external auditors, it's not going to work in my view. And within the question of corporate governance is the question of directors. I have observed that in a number of banks, you will find that half the directors are family members, father, son, brother, uncle, etc. And I think we need to bring in some degree of restriction on the number of family members that can become members of the board. And the follow-up point is on the question of insider lending, which again has been a corporate governance related issue. I think CBK has guidelines on what insider lending can and cannot be done, but I think now is perhaps the time to consider whether banks should not be allowed to do any insider lending whatsoever. Because I think this will improve the corporate governance practice. Thank you.
Thank you.
Thank you. Thank you, Sheila, for bringing out that insightful discussion about corporate governance. My name is CPA Claire Ondere. I work with Mercycorp. And my question really lives around what we have observed going around in the banking sector lately. And I would like you to bring out when do we get reports of the key challenges that were experienced in those institutions, and what each actor will do subsequently in order not to go through the same challenges with similar institutions, and what assures us out here that things will be good now and we should be trusting banking sector, and I don't keep my money under a mattress. Thank you.
There's a gentleman at the just behind.
Hello, good morning, everybody. My name is CPA Paul Muduri from the Office of Auditor General. Thank you, Madam Sheila, for that highlight in terms of corporate governance. And you have mentioned that the central bank is the gatekeeper in terms of corporate governance within the banks. But when you look at what has been happening, for example, with the issues of Imperial Bank, where we had a case, the corporate board that was issued in the National Stock Exchange, and first of all been approved by central bank. They did their due diligence, and then NSC also did their due diligence. But within a month, we find Imperial Bank collapses. And then you realize the investors in that board, majority of them were chairmas, and others were retirement benefit schemes. So it appears very clearly either the stakeholders, and particularly the central bank, was sleeping on the job, because you approved that board in the stock exchange, and we find within a month Imperial Bank collapses. So my question is, what assurance are you giving us as a CPA person in central bank, and the commitment that those kind of issues will not be repeated again? Thank you.
Thank you, members. I think we are going to let CPA Sheila respond to those three questions.
I think maybe I better stand up. I've never been tall, but in my next life I'll be very tall. I realized that coming here today, that there was many people with many serious questions. And I thank everybody for those questions. I think they're what I expected. And I also like the fact that in the Kenya that we now have, people are holding others accountable, and also that they are participating in what is happening in the country. So I always say, if Kenyans are not going to build Kenya, who will? So I'm happy to have these questions. I look at the complexity of the world. What we would like to see in Kenya, and what is part of Vision 2030, is an international financial sector in Nairobi. And so what we're talking to there is we're talking about the region using Nairobi as the center of excellence for the financial world. And I think it's kind of a similar thing that happened in Switzerland, where a lot of financial activities were done out of Switzerland. And obviously this will grow our economy, and for CPAs and lawyers and our stock exchange, etc. This is a huge opportunity. But to get to this place, we have to do two things. First, we have to make this environment safe for everybody, not just Kenyans, but investors to come and invest in. So it must be transparent, it must be robust, and we must comply with the rules and regulations that have been put in place. So when I look to this as well, and I see the complexities that have come into the IT sector, and I wonder how many of us are really competent to test, check, review, confirm, and report on some of the difficulties and the complexities in the IT sector. And the gentleman raises the issue about corporate governance. Is the same expertise there? I would beg the CPAs to think deeply about this. The central bank's mandate is really three things. We do monetary policy, we do financial sector stability, and we do national payment system. You are better placed to see how you can create an expertise in the corporate governance sector. We would be very happy to support you and be behind you in the activities that you're doing. But I think as professionals, you're really in the best place to do this. You've done it with forensic auditing, and you've done it very effectively. And we would beg you and ask you, work with us. We're happy to be there with you, but if you could please tell us how this is done, and we could support you, and in other areas that you see. So I would put that challenge back to you. Trust in the banking sector. I think when I took this job, the outcomes of the last 11 months is not what I was expecting. I was expecting a lot of challenges, but I was not expecting these outcomes. So even as I think back as to what's been happening, I was also concerned. But two things have happened that have really given me a sense of purpose and a sense of courage and a sense of reassurance. I got a call from a very senior regulator in the US. And what he was calling to tell me is that in 2007, 2008, we had the global financial crisis. And coming out of that, a lot of laxity, a lot of indiscipline, a lot of difficulties were evident in the financial systems in America, Britain, and Europe. But coming out of that, what they did is that they tightened up, and it's a word I like to use. I like to use the word realign. So now there are new regulations in place that must be complied with. There's new capital levels that must be complied with. There's new buffers, protections that must be complied with. So he was explaining all of this to me, and he said, all this time, people have been asking the question, what about Africa? Because all of this had been going on all over the world, but there was no evidence of anything coming out of Africa. So they were asking themselves the question, did this mean that this global event had no impact on Africa? Or did this mean that Africa has still not responded to it? And he said that he's so delighted to see that Kenya has begun the journey of responding to it and realigning its finances in line with what has happened around the world. And more recently, I got a call from Nigeria, again from a very senior regulator. And I don't know if you noticed last week, the Nigerians have started the same journey. So is this specifically Kenyan? I don't think so. And I think what we have is we have the right team, we have the right support. I think we have a lot of public support, we have a lot of government support, we have the right support to realign. But let us be very clear. This is a realignment. It is not that the whole sector has a problem. This is a realignment. And I believe that the governor has spoken out very clearly on this matter. And he said that we're past the tipping point. And we're now in the new normal. The new normal is adherence to the regulations and compliance with the rules. This is the new normal. Some people don't like it. Some people are finding it a little bit more difficult to do. But this is the new normal. Sleeping on the job. I think I've done many things in my life, but I've never slept on the job. If anybody tells me about working with me, they'll tell you that I'm too active. So I think you need to use another metaphor. That one doesn't work. But the governor has this lovely story about licensing. And he says that, when you go and you're going to drive a vehicle, you go for your test and the policeman checks that you know how to drive, and in the end he gives you a license. But the license doesn't say that you can drive when drunk. Are you with me? So I'm saying there's also responsibility from the other side. You are CPAs. You have sat exams. You've been given this certificate that says you're a CPA. Don't be a drunk CPA. So I would like to leave it at that. Thank you.
Thank you, CPA. I'm going to take another round. Possibly from another row. Yes, I'll take the gentleman at the back there. There's a gentleman at the back. And a lady here. Yes, and a gentleman here. Let's take those three first. Yeah, the lady can go first. I can see you have a mic.
Okay. Thank you, CPA Sheila. My name is CPA Jane Berria from Continental Reinsurance. My question is, are we there yet? I know you have talked about realignment and whatever is happening. And what I see in the financial sector, especially being from the insurance industry, and so is the banking industry, there's a lot of family ownership. At what point will the CBK come in and start regulating to ensure that the owners do not bring into board their friends, their families and all that? And how long do you think before we can get there? Thank you.
Good morning. My name is CPA Omar Kofa Komora. I work with Ethics and Anti-Corruption Commission. CPA Sheila, I really want you to talk something about the Chase Bank and KCB takeover. What regulation maybe was it? What kind of regulation maybe has taken place there and KCB took over the Chase Bank? Thank you.
Good morning, ladies and gentlemen. My name is CPA Jeremiah Matoke. I work for the National Treasury, posted at the Ministry of Water. My question, first of all, I wanted to talk about corporate governance, which is defined under the Cadbury 1992 report, which came from the British, that it is management and control of a company. And it is squarely vested on the board of directors. Now, you talked about vetting shareholders who have significant shareholding in those banks. Do you also vet the people who lead these banks, the board of directors? And following on the same vein, do you vet the management, because they are the ones who do the daily operations? Because a lot of the problems that we experience in the banks are around poor management. Since independence in Kenya, we have had 37 banks collapse, and Central Bank is in place, and they are doing bank supervision every year. Do you estimate, in your judgment and in your opinion, that 1 year is a good scope when you should be doing these corporate governance annual reviews? Because you said corporate governance is not an event. It is a continuous process. Why can't you, for example, be able to review and monitor and evaluate the activities of these banks quarterly? I've had the opportunity, Madam Shira, of going through the bank supervision reports backwards from 2014, 2013, 2012, and each year there are banks which don't comply, and the report is there in your reporting. Now, what do you do with those reports? Because those are red flags. Finally, about the presentation of reports, I think that will not be within the purview of the central bank. But those reports, the financial reports, they are forwarded. Copies are forwarded to central bank. And those reports, some of them have got things that are not presented properly. Because you cannot have a report which is positive today and then tomorrow a bank fails. So can you explain why the central bank cannot read the flags in good time to save the depositors? Because as a CPA, I'm also a depositor in those banks to create confidence in the Kenyan banking sector. Thank you very much.
Thank you. Thank you, CPS. I think I'll let CPA Sheila respond to those ones.
You know, I was fortunate enough to be given a book on the origins of banking. You know, in summary, what happened was that you had in Venice all these guys who had ships, and they would get in their ships and go away for 1 to 2 years doing their trading. And then they would return to Venice with their goods and sell. And very quickly they became the richest people in town because of the risks they were taking and the activities that they were carrying out. But the problem is that when they were going on their next trip, they had all this money, they had all this wealth, and they knew they were going to be away for a year or two. What do you do with it? So they identified the person in town that they trusted the most. And they would leave their money and goods with that person, with the understanding they're away for 1 to 2 years, and when they come back, that person will give them back their things. But that person, after a while, said, I'll give you back your things, but you need to give me a commission for looking after them while you were away. So this is the origins of banking. And therefore it started within communities and it started within families. Is that appropriate for Kenya today? Is that appropriate? And that's the question that's being asked. And do these family structures have the ability to do the job they're purporting to do? Do they have the trust of the community to look after these things that belong to other people? And I think that this is now the questions that we're all asking. I have asked for a study to be done, which is looking at Kenya 2030 and looking at the pillars that come out of that Vision 2030 document and saying, what kind of organizations do we need underneath those pillars to achieve our goal? So I know for sure that some of the smaller capitalized banks have been very effective. And some of those small structures have grown into the huge institutions we have today that are very good for Kenya. We've had a lot of international banks, but we need our domestic banks. And this is where they began. This is where they began. So what I would like to say is I really want to see the outcome of this study. I concur totally with the lady's lack of confidence in the family structure, because the family structure at the moment has let us down many times and it needs to be challenged. And as I said, this whole thing of reassessment of corporate governance and how we manage things is ongoing now. So that's what I'd like to answer for that first question. I think the second question really talks to the same thing about the confidence in the financial sector, which I have already addressed. I obviously will not be dealing with any legal matters. A lot of matters are in court, and it would be incorrect and inappropriate of me to open any of those. I think the gentleman from National Treasury, I was going to ask him where is that government spirit? Because I'm also government and I'm standing up here alone. But I forgive him. I forgive him. I think my understanding is it's 25 banks that have gone down since independence, and each and every one of them has been very painful for this country. And yes, we need to move to a stronger base of the financial sector in Kenya. And at the same time, we have to recognize where we are in the evolution of development of financial sectors. And if we make everything too difficult, then that means that the small businesses will never have a chance also to move on. So it's a balancing game. Do we make mistakes in that balance? Yes, we do. Are we becoming better at it? I believe so. Do we need more support from people like ICPAK? Yes, and we look to it and we want it. So I think in response, as I said earlier, it's a network. Central bank has a lot of responsibility, and we take it very seriously. But so do the board of directors, And yes, we vet the board and we vet the management. Have we been right every time? Obviously not. I don't want to stand here and say things to intelligent people that don't make sense. Obviously not. Are we reassessing the way that we do it? Yes. Will we try and do a much more robust job in the future? Yes. And even more, I would say that if you have ideas that you think would work, tell us. We don't purport to be the experts in everything. Tell us if you think that there's a better way of doing it. But one thing I keep asking is please balance. We're still trying to bring the whole country together and move it as one unit. So we can't make it so difficult that only the top moves and we leave the rest behind. Thank you.
Thank you. I think I'll take maybe one question. This side, one question. Yeah, I'll take the gentleman here. Can I take one question this side? Yeah, there is a gentleman this side. I think we are running out of time. Maybe just one question from this gentleman again. So three, please. 3 questions so that we manage time.
Good morning, everyone. My name is Stephen Macau from National Treasury, currently deployed at the Office of Director of Public Prosecutions. Now, I think among the stakeholders of the good corporate governance is internal auditors. And I would like Sheila maybe to comment on the relationship between the internal auditors, CBK, and the external auditors. I'm an internal auditor, and we have experienced some constraint when it comes to the relationship between internal auditors and external auditors. And this is experienced in the area of audit committees. You find that it's like the internal, the management thinks that audit committees are meant for internal auditors. The external auditors also are not, you find that like I've worked in that organization for the past 3 years, and we have never had external auditors attend even one session for the audit committees. So I would like just to hear from Sheila whether that is what happens in CBK or they get more support from external auditors and from management. Thank you.
Good morning, fellow CPAs. My name is CPA Patrick Moturi from Taylor Winch. I've been having a burning question here, and the moderator hasn't been seeing me. I think he's long-sighted or something. Okay, I would like to just comment and then ask my question in regard to family ownership of the banks. I'm of the opinion that family members should not just be restricted because you are affiliated to a certain bank, yet if they are qualified to do the job that they are supposed to do, why not? What I would propose is an issue of the people who are doing the job be vetted. And if they are qualified enough, let them be allowed to do the job. Secondly, we know that from time in history, an example of the National Bank, the problem that has been there has been loans, senior management giving themselves loans, which they end up not paying. Now, with the central bank, with its role as the regulator, I'm of the opinion, maybe Sheila can correct me on this, I'm of the opinion that to avoid the conflict of interest that has been there all along, all loans that are supposed to be taken by the management of the various banks should be confirmed by the central bank and also be looked at closely so that we don't end up having the kind of problems that we are having at the moment. Thank you very much.
There was somebody on that side?
This side, I think, let me complain. They've actually forgotten this side. I think FCPM Watu, you've been checking your direct, and then you are right, but you've actually forgotten your left. So I must say that, please, we're here. My question is actually simple. Before, let me say my name is CPA Kiptum. I work with the presidency. And I think we've forgotten about us members, that we have external auditors who play a role, the agency principal. And many times they give unqualified reports. And when the company collapses, then we forget about ourselves and we blame others. So I think the blame is actually on our side equally. And we should do something so that we can actually reduce the problems that you're facing in the banking sector. So let's not apportion blame and say that it's actually the central bank or it is another area. Let's do it ourselves, because I believe we are real stakeholders. And if we can stop it, then I believe that we can actually play our role in building the economy of Kenya. Thank you.
I don't know whether we have our last one.
Yes, we have our last one. Thank you.
Okay.
Sorry, mine are two quick ones, Sheila. My name is CPA Ringera. I wonder whether central bank has a moral authority to talk about governance when already you are missing governance by not having a complete board of directors, and you are forcing banks to have a complete board of directors. My second question will be almost on the same. The relationship between central bank and KDIC is a little bit jittery in the market, given the director shareholding between, the directors share between central bank and KDIC. The drafters of the law are very clear. They knew there must be a Chinese wall. We don't see any Chinese wall between KDIC today and Central Bank of Kenya. How can corporate governance then be managed on that? Thank you.
I think members, I'll stop there in the interest of time. So I'll request Sheila to respond to that.
I think tomorrow's Friday. So I'll be looking forward to the weekend after this. And I'll be careful if you invite me next year. I'll be very careful. I also want to thank the friend I have over there who realizes I'm alone up here. Thank you very much. Yeah? I think on the issue of the audit of CPK, I really wouldn't want to comment too much on that. I've been properly trained, and I understand that I'm the person being audited. And in fact, I'm sitting next to Bwana Oko here. So I think those are the questions you can direct at him. I'm the recipient of the audit, not the person who has any control over it. So you can ask him those questions. I think on insider loans, there are very strict rules around insider loans, and particularly for board members. These have not been complied with. If you're getting a loan, it has to be strictly in normal terms. It needs to be reported to the board, blah, 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 blah. It needs to be put into the accounts. This has not been done. So, sometimes I hear people saying that there's new rules. There's no new rules. It's just enforcement of existing rules. So I think also I would ask us all in this network of managing corporate governance, central bank and boards and management and control units within institutions, all to play their roles, and including ICPAK. I think on the moral authority issue, I'm glad it's the last question. I think what I would like to say is that the central bank is able to respond to the challenges, the corporate governance challenges that it's facing currently. I said that corporate governance is an ongoing thing. It's not a point in time. And these are our challenges. And yes, you're holding us accountable, and we hear you loud and clear. I think I leave it at that. Thank you very much indeed.
Thank you, Sheila. Let's clap for her again. Thank you, members. And I would just want to say that I think in the last few months, the external auditor has been on the spotlight. And I don't want to look like I'm protecting the external auditors. But I would really want to talk to the accountants, because in every collapsing commercial bank, there is a CFO, who is a CPAK. There is an internal auditor, who is a CPAK. And I actually think the external auditor is a second level oversight. So just a challenge to us as CPS, what are we doing to save this country? Before we go to CBK, before we go to ICPAK, what are we doing as professionals? That's a challenge to all of us. And I think it's an opportunity for us, CPA Sheila, for the Institute also to partner with you, especially so that we get the best CPAKs working for these financial institutions. I think in the prudential guidelines, there is a prudential guideline on corporate governance, which requires a CPAK in the board of the commercial banks. So again, I think that's an area we can collaborate so that the institute vets these accountants. And I'm very sure the corporate governance agenda will be taken to another level. Thanks a lot. Let's clap for Sheila again. And I want to request CPM Malombe. CPM Malombe is a council member representing the National Treasury to step forward. And I can confirm that this memento was audited. Is exactly 20,000 shillings. And it was deliberate so that CPA Sheila does not need to declare. Yes. Thank you, CPS. I now call upon the CEO or CPA Tom, yes, to give us direction from here.
Bwana ni mwokozi wangu, tena ni kiongozi wangu, ananipenda.
Let's appreciate that session. Let's appreciate the session. I want to think it's a good session. So much has been learned. I also know that many questions that you still want to pose. I will be able to enable you along the way to be able to pose those questions through electronic means, and you'll be able to interact with each other and, of course, the session chairs and speaker later on. That we shall tell you once we enable that to happen. In the meantime, I just want to make a few announcements and then give a way forward. First, I would like to recognize the sponsors of this event. Silver sponsor, CASNEB. Gala dinner sponsor, KPMG. Wi-Fi and internet sponsor, ICAEW. Cocktail sponsors, Higher Education Loans Board and Sage One. Exhibition sponsors, we have Tally Solutions, we have Caseware, Uridi Housing Sacco, Muhasibu Sacco, and UAP Insurance. We have the booklet sponsor, KCAU, our own, that's KCA University. Wi-Fi partner, Safaricom Limited. Supporting sponsor, EY. I request you that on your way, as you're taking tea, also take some chance to go to the exhibitions there, see what they have for you. I'd also remind you that we have an exhibition for ICPAK Scholarship for Finance and Accounting students. I'm encouraging you to pass by there. So many things, so many presents, so many prizes to be won. There is a raffle going on there. You'll be able to participate by paying 500 shillings only, which goes directly to the sponsorship of those 3 students that we have, plus the 3 more that we're going to take this year. You're able to win a weekend getaway at Sarova Lion Hill in Nakuru for 2, dinner for 2 at English Point Marina, dinner for 2 at Sarova White Sands, 2 nights accommodation at Ziwa Beach, and that way we shall be supporting the sponsorship of those students who are on scholarship courtesy of ICPAK. Yesterday we sent a link for feedback through SMS. I still want to encourage you, if you have not responded to that link, kindly do that because we need your feedback. is quite important for us to make this event much, much better. Today, again, we shall send a link for feedback in the evening. I think the best way is to respond to those the feedback questions as soon as you receive it, when it's still fresh in you, the experience you've had. Presentations of this seminar shall be posted on the website on Friday. We'll remind you on that. Those who are watching this live, I'm aware that quite a number of people are streaming live from all over the world. We've gotten so much feedback. Carry on streaming live. It's good. In the course of it, those who are streaming through ICPAK Live, our application, you'll be able to win some presents because we'll give you a link to feedback, as some questions shall be posted in the link. You may be able to win some very interesting presents. I want to mention something about the program, a bit of adjustment to it. If you look at the program we have, after tea, we are supposed to have track sessions, but that has been modified. The session shall be co-chaired by CPA Susan Oyarsi and CPA June Kivinda, both of whom are council members. They'll co-chair the session. We're going to have CPA Michael Mugasa, convener of Professional Standards Committee, ICPAK, present first. Then we're going to have FCPA Edward Ouko, Auditor General, Republic of Kenya, to present next. Then we're going to have a joint question and answers session after that. This is the interest of, we've had a lot of feedback from members who would want to attend both of these sessions. So if we had separate rooms, people will miss certain sessions. So that's the small adjustment we have there. At this point, I want us to take a break, and then we come back as scheduled in the program. Let's come back at 11:15 to begin the session. Thank you very much. Asanteni.
Si kama binadamu badiliki, ananipenda leo kuliko jana.